The stock which we'll discuss is Kaynes Tech. Company came out with its annual report, but then their Kotak Securities pointed out some important views which were actually very interesting, and the company actually came out with a rebuttal as well. So we have taken a lot of points here and created a scenario for bull and bear cases. First of all is the acquisitions front. That's the bull case scenario coming in. They are helping the company enter new geographies and segments, but the concerns are still there. What are the concerns? Ambiguous goodwill and reserve adjustments under the acquisition. That's where the financials get hurt for the company. Also, another bull case scenario is that management is stating that the interest rate cost, that itself will work out to be around only 10%, which includes the bill discounting as well. That's the second bull case scenario which I'm talking about. And the bear case scenario over here is that the average borrowing cost in FY25 was at a very high 18%. So this itself contradicts management statement here. But then management also stated that they have reaffirmed the disclosure norms going ahead for the fixed assets, and they have noted it to the future. That means they have recognized what was raised by the brokerages and the investor community. And also the 500 crore net year in payables, that's also a cause of concern because of the related party transactions. But what are the analysts stating? That's very much important. 14 out of 26 analysts have a buy call, and still because of the correction we saw, a 53% return potential is expected. But looking at the bear case scenario, JP Morgan, they have stated that they are staying overweight, but they will avoid bottom fishing for now. So there are divergence trends coming up when it comes to the overall analysis for Kaynes Tech. But let's move on to the management. They spoke with us and they gave their version of the story.
If you see the 18%, this is including the bill discounting and the working capital. If you split it up, it's coming to only 20%. But if you apply the same logic for the previous year, it was 25%. Because bill discounting as a process when we acquired the new business and the Iskramico, where the metering business, you know the nature of the business, it takes a little longer time to collect it from the receivables of the government and the transactional business of this. It has happened like this. So these are all the transactions. If you apply the same logic, the 17% this year was 25% the previous year. So we fully understand as an organization, we are committed for giving the transparent feedback and information to all the investors, shareholders, and people like in the public. But the only thing that we wanted to say is we have given this response because there is a concern that is raised. Yes. As far as we are concerned on all the 6 points, when you see, most of the transactions is as per the statutory standings. The only thing is, during the year of transaction from Iskramico, during the merger of the year, one disclosure is inadvertently missed, but the balance sheet and P&L has their information. That's as a related party transaction. First 6 months they were as a supplier, second 6 months is the part of the related party transaction. That is the only thing that we feel that we will improve in the governance and our business.
Mr. Kuniganan, so that's where the issue arises, because this is not a small transaction, it's 180 crore rupees. So I think the concern that is raised, and of course your statement is that it was inadvertent, but then that's where you have...
So it is already, we had no disclosure problem, because if you see, it is there in the balance sheet and everywhere it is there. It is only in Kaynes Electronics, notes to accounts is missing. So it's an error. We agree, we will correct it.
Okay.